Hey guys, it is December 17th, 2025 here with your nightly watch list video. Before we do the watch list video, because it is going to be a fairly quick video in terms of setups, the reality is today the market kind of got hammered. The AI trade continues to get unwound. NVIDIA lower really over the last couple of days ever since it rejected the 50 simple moving average on news that they can sell H200s into China. It wasn't just that. It was Oracle lower at the lowest point in the entire formation. And we could take it a step further, right? You could look at the nuclears. Oklo at the lowest point in the whole formation, right up against the 200 simple moving average, effectively unwinding the entire move higher. And it just goes on and on. You could look at the rare earths, you can look at the quantums, you could look at the data center stocks, you could look at your irons of the world just getting absolutely beaten up. Hut gaps up on news of a $7 billion multi-year contract, hits the 50 simple moving average and just sells off on big volume all day. And just pretty much everywhere you looked, the market was just kind of getting beaten up. With that said, I did have a little bit of a gap up in FSLR this morning, and then as soon as we started to roll over, I just took my position off the table. I'm not going to sit in a stock while the market's kind of getting its butt kicked. I even thought that, maybe Hood could play out as a higher low, and for a moment, it was showing really nice relative strength. Right at the open, this thing was acting pretty dang strong while the market was coming down. But I told myself I wasn't going to buy a 5-minute opening range break when the market's going down, especially not into supply. And what happens? You go and make a new low. Then all of a sudden this thing starts rebounding and the market's just still selling off. And at that point, I said in the room, let's just track what's showing relative strength today versus actually trade it, right? If something's just showing relative strength, great, we'll keep it on the radar. Those are the kind of names you want to own down the road. And then what happens, this thing rallies right into the 20 and then just sells off, consolidates, and then rolls over for the remainder of the day. So that's just kind of where we're at the moment. Everywhere you looked, even Reddit today looked pretty good, but you really can't overcome the market pressure. You effectively gave back today's entire push. Not that big a deal, right? Reddit's still one of those that I think looks pretty good. And then how could I forget it? This is one that I actually own. And of course, this one's been showing awesome relative strength for the past 3 days. So I come into the market today saying, you know what? I didn't think it was going to sell off as much as it did. Let's just kind of give this one an opportunity to work. This is one of the leaders. I don't really want to get rid of my Tesla position, but effectively on the bearish engulfing bar, I was forced to take some off. Not the prettiest action today, but is it really Tesla's fault, or is it the environment we're in, right? If you look at the QQQ, this is not necessarily what you want to see. I thought the action yesterday, could have maybe been indicative of a potential higher low, get back above the 20 and the 50, continue to build out the right-hand side, but it was just the opposite. It was a pickup in volume. It was a rejection of the 50 simple moving average, and that is not necessarily what we want to see. Right with QQQ, you had Google get taken down with it, and Google's still, technically fine, still above the 50, similar to what I would say about a Tesla, still technically fine, still above your 50, but there are so many stocks, speculative or otherwise, just getting absolutely crushed today. There were some names that I thought were holding up well, and we'll talk about those for potentially tomorrow and the watch list, but Bitcoin lower. Ethereum, just again, you thought it was all good, party back on, nice pop, and then all of a sudden gives it all right back. Ethereum, same deal. You get a nice little pop in the morning and kind of gives that back. Doesn't look the best, does it? I mean, it just we're in a downtrend. So especially in the crypto space. And just when you think maybe you could get a little bit of a relief rally, you're buying stocks into supply, which is a no-no. In fact, those are kind of the spots to look for shorts, and really those have been working really well. I'm obviously kicking myself a little bit because I don't have Rigetti anymore. I don't have, looking at UAMY as a short. I had this thing at like 18.5, And to see this thing breaking below the 200 simple moving average today is just crazy laughable. How it's $14 off the highs in just a couple of months. Absolutely nuts when you think about the unwind in some of these things. 75%. And that's just what happens if you don't respect your risk. And you know, I covered myself on this, you know, bit of a higher low, you know, total scrub work, not letting this thing fade off some more, kind of knowing what UAMY is over the last few years. But you know, you get a big unwind in Tesla, you get a big unwind in the speculative stocks, right? There are some biotechs, there are some pharmaceuticals, and even like I want to say it was it INSM? Yeah, it was INSM. You've had this really beautiful trend. You know, you're holding up super well. You're trying to get above the 20 today, and then this is just the sort of risk that happens. You are now trading all the way back down to 160. So effectively, a month plus of price action just completely evaporated, which again just makes why holding some of these biotech-related names, you know, just such a something that I really don't even necessarily love to do. So they forced me out of a little bit of Tesla. They forced me out of my FSLR this morning. I did put on some AEO on the short side, right? You start to get very extended, 12 times its average true range from the 50. You push up in the morning, and then you start to re-push back up against that left side peak and then start to fail. 620 setup, break a VWAP, go right on the day, roll over into the close. That was at least a pretty good start and something I could look to build myself into, right? And for the record, I want to say that every stock in the market that has gotten 10, 11, 12, 13, 14 times its average true range from the 50 has gotten at some point beaten up. Doesn't matter if you're SNDK, it doesn't matter if you're quantum, doesn't matter if you're nuclear, it doesn't matter if you're you know, any one of these memory stocks. They have all gotten beaten up when you get, you know, very extended from the 50 simple moving average. Has AEO started to get you know, started its, you know, potential peak and then roll over at least probably into the 20? I don't know, but at least the risk reward is there, especially in this market. I think some of the you know, other stocks are quite beaten up already, and there's, you know, maybe you're just almost gnawing at bone at this point to kind of short them. But the market has given you opportunities to short stocks that are wildly extended. You just kind of got to work your way into them, add into your winner, and then just let it work, especially once you're underneath the daily VWAP, and then just, you know, kind of take it from there. Not get too greedy. Of course, I could look at a Oklo and a Rigetti and an Iron and a Cypher, and I can sit there and say to myself, like, boy, I wish I still had my shorts, right? I mean, those obviously are working fairly well. I do have some QUBT, which continues to roll over off the 200 simple moving average. Took a little bit of patience in here while this thing was just kind of chopping back and forth to finally start to speed up a little bit to the downside. I would almost expect that, you know, we're low single digits at some point in the near future. So that's one that I'll just hold on to. And then I still have my Netflix where, you know, you tried to pop today, and then ultimately market pressure caused this one to cave and basically close into the red. So, you know, that's just the environment that we're in. These names don't look very good. A Spotify doesn't look very good. There are stocks in stage 4 downtrends that are just already looking very poor. And, you know, the AI trade is something that has been unwound now for quite a while. So I don't want to get overly negative because really at any moment, you know, you could start to get really a nice bid coming back into an NVIDIA, an AMD. But the reality is we have so much repairing to do that this just doesn't look that great, right? You reject the 50, you roll over. Today's a nasty day. I don't know if there's going to be continuation tomorrow, but it kind of looks like when you have a narrative like the AI trade, which has effectively pumped trillions of dollars into market caps of whether it be, you know, a CoreWeave or an NVIDIA or a Microsoft or Google or, again, AMD, AVGO, you start to get action like this. And we've effectively gone nowhere for a few months, and you look at how far some of these names have come, it could very well be that these are just late-stage bases, And late stage bases, you eventually get beaten up. You get beaten up to the tune of 30, 40, 50, 60, 70, 80% in some instances. And that's just the reality of, you have to have some rules to kind of get you out of the way so that you don't get your ass kicked. But that's just kind of the reality of markets, right? Things go up. They go up for really what we've learned over history is 6 to 8 quarters is about typical. 18 to 24 months is about how long a market leader will move for. Well, the reality when you think about an AVGO or an NVIDIA or an AMD, and I'm not claiming that these names will never go see a new high, but when you get a bull market, this your leader and your thematic leader, which has been AI, and then that theme starts to come undone, right? That's going to be 30 to 50 to 60 to 70% declines once these things eventually put in their peaks. And then we just don't know how long it takes for that to repair. But a lot of these names have already gone longer than 6 to 8 quarters. Some of them bottomed in, the ends of 2022 and have really been going for a whole lot longer than that, really 3 years now. So it could just be that maybe this theme is a little bit played out, right? That your NVIDIA, unfortunately, and again, I don't want to get overly negative. I just look at an NVIDIA and I say to myself, like, okay, what now? This looks a little bit sloppy here. There's nothing tight. It's below the 50. It's a really long-term trend already. Could it just be a late-stage base? Could it just be that we have to come down to the 200-day, maybe undercut the 200-day, build a new base, and then in 4, 5, 6, 7 months revisit the idea as it's starting to turn back up? That could be the case. And again, I don't want to get overly negative, but for now, market is kind of screaming risk off, unfortunately. And that's just been the case when you look at something like CRDO, on good earnings, and you hit this double top and it's just been a straight down double top short sale, or you look at an AVGO and it's acting like one of your market leaders and it goes and tries to put in a new high on the 10th and the 11th, and then eventually just rolls over and caves on earnings on a big pickup in volume. And everywhere you look, TSM hits its left side peak and then just rolls over, and just ugly distribution ever since then. Is it a product of the market? Probably. Also, is it a product of, some of these, the AI theme is a little bit long in the tooth, and, we need to go through an ugly period to kind of come out on the other side. Like I said, the market doesn't necessarily look the best at the moment. Obviously, today was a bit of an expectation breaker. I thought yesterday when I was doing some scanning, hey, you know what? There's still a lot of quality names out there, and Twilio still looks good, and Reddit still looks good, and maybe Palantir is holding back above the 50 simple moving average. But boy, the more you look, whether it's at a SoFi, with a potential double top, or you looked at your Iron, which was a potential double top, or you looked at your MU, and obviously earnings here were great as a potential double top. I know we're gapping up, about 240s. So that's all great. We'll see kind of how that plays out. But you've had a lot of these names hit that left side peak and then just reject, and it's been ugly ever since. And again, I just don't know where we necessarily go from here when you're losing the biggest theme in the market. And that's not to say we haven't already lost it, right? You can make the argument that we lost Oracle long ago when it broke below the 50-day, and this thing has been in a downtrend now for, to the tune of another 30%, over the, the course of a month and a half. Fine. And maybe NVIDIA doesn't have to go much lower. Maybe neither does AMD, and maybe AVGO will start to bottom. But again, you take it one step further. You look at cybersecurities. You look at CrowdStrike. That doesn't look too great. You look at Rubrik after a really nice report and a gap up on earnings. That doesn't look too great. You look at what they've done to Zscaler. That does not look too great. Back to the breakout level of 217. That looks absolutely disgusting. And you can just kind of take it down sector by sector, right? You could look at your Coupangs of the world. You can look at your Mellies. And really, I'm hopeful that we don't lose banks, right? I'm hopeful that we don't lose, your JP Morgan, which, kind of hit a new all-time high and then starts to falter a little bit. I'm hopeful we don't lose a Goldman Sachs, etc. And this is just some healthy digestion. And it just is what it is for right now, unfortunately. I would love to say that I wasn't forced out of a piece of my Tesla trade, but I was. And I would hope to say that I wish I didn't have all my shorts and that I covered them perfectly. But the reality is, you cover an oak low into a close above the 20 simple moving average, and this ends up being the tippity top before this thing just drops another, 27, 30%. And I'm like, damn, even on tiny size, this would have been fantastic. So it's just kind of the environment that we're in. You have to respect your risk and, don't necessarily hunt for bottoms, because what goes up and continues to go up can also, what got expensive and maybe a little bit ridiculous on the long side can also get a whole lot lower, and it will feel a little bit ridiculous on the short side. And every day you're trying to bounce, and just kind of exhausting yourself for when the market actually turns. With that said, I do think that the best setups at the moment are in the gold space. And, these charts, I still think, look pretty dang constructive, right? You've just been building a series of higher lows. Obviously, you've got this left side peak. And I would tell you that gold names are lagging silver. And then obviously the weird part about that is silver junior miners are lagging silver. I don't know why that is. But AGI, I think, looks pretty decent. We're not very extended from the 50. I love how you're just kind of hanging out here. Are you ready to take out a prior day high and continue higher? That looks pretty good. AU also is another that I would say looks pretty good. You've just been building out a base here. Nice series of higher lows. You're starting to tighten up right on this right-hand side. That is also nice to see, right? Do you just take out basically a prior day high, 86.5, and then get going? Barrick Gold, which is one that, I tried owning way down here, and obviously this one's been a monster. Is this just this little wonderful inside day, this little high type flag? Is this thing ready to get going? Also, that will be interesting to see how this thing plays out tomorrow. Keep going down the list. EGO, which is El Dorado, same deal, just building a series of higher lows. Every time you go up, you tighten, you go up, you're starting to tighten. This one will be interesting as well to see what it looks like if you're taking out a prior day channel, effectively $35. And we can just kind of work our way down the list. Same deal, GDX, again, series of higher lows. They should all look very similar because birds of a feather flock together. These if you're gonna try one, you don't need to own 6 of them. You don't need to, have 100% of your portfolio in gold at all by any means. But if you're gonna try one, right, 1 or 2, I would say is more than enough. I still own Newmont myself, and again, same deal. Looks pretty good. Maybe a little bit better than the others, just because at the very least you close fairly green. But again, an inside day, nice and tight. High here today, 120.28. High here, 123 cents, and then high here, 128 cents. So basically over 125. Looks pretty good on a smaller time frame. We will see how that gets going, and you could just work your way down the list. HMY, another one, same exact chart, except you're just not over this left side peak, but same deal, looking pretty dang good. IM Gold, again, same deal, looking pretty dang good. These are the exact same charts, basically. Nice push, nice consolidation, another nice push, another nice little consolidation. And do these things just keep stair-stepping higher and higher and higher? You get the picture. Very few software stocks look, good at all, so I really won't even mention them. Obviously, Twilio, fairly interesting today. Nice job closing green in this environment. That's screaming relative strength, but so was Tesla yesterday, and then got its ass absolutely handed to it today. So, what do we really make about that? Palantir, which I thought was pretty interesting yesterday. Do we maybe reclaim the 50 simple moving average tomorrow, and then you could play it as maybe a 50 simple moving average undercut and reclaim? I don't know. That's just the reality. We don't know if this market's going to go lower. If the market is going lower, the thing I would tell you is track relative strength. Don't trade it, right? I almost put on a position in Hood today. And fortunately, you just got to remind yourself in real time, when the market's going down, track relative strength. You do not want to trade it, right? When I got involved in Tesla, the market was perking up, and I got myself involved on the 2nd of December. And then obviously, while the market was showing some weakness, this thing was showing relative strength. But then today, as the market was showing weakness, finally, this thing kind of buckled underneath the pressure of the market. Can I really blame Tesla for that? When the market loses the 50 SMA in a really big way, and if the market were to continue lower, my expectation is that so does Tesla. It's hard to really go higher without your market, especially if you're a NASDAQ-related stock and your NASDAQ is the thing that is lagging. Regional banks still look pretty interesting, except I can't really find my way in here. But again, nice little downtrend line break. Nice job being above the 200. Nice little push, high type flag. What do we have, coming up in some of the regionals? I don't know, but I think regionals going higher could be good for the IWM. Obviously, there's a lot of financial names in the IWM, so that will be interesting over the coming days. But otherwise, big day today for the Oilers. I thought it was awfully cruel the way that they came and stopped me out with this very, very weak dump yesterday, unfortunately. And so I was getting stopped out of XOM. And then I even told myself, I was hopeful for Brent Crude to undercut and rally back through October's lows. And then we did that today. So how absolutely cruel was that? XOM, obviously, with a small little gap up overnight, that is fairly bullish. And then you get back above the 50 SMA today. Yes, in hindsight, buying this thing back as a 5-minute opening range break might have been the right idea, but I did not. And then ultimately a really nice trend all day. And it doesn't matter if you looked at XOM or if you looked at FANG or if you looked at DVN, they all did the exact same thing, which is, kind of a cruel thing to do, for the market. But obviously, bottoming and breaking out into stage 2 uptrends for some of these oil and gas stocks is a bit of a process, and oil and gas names tend to be buyable against their ascending moving averages. That's kind of why I was hopeful for me to be able to get back involved in an XOM back through the 50-day, but I just didn't do it. Hindsight being 2020, of course. But yeah, this market is not on easy mode at the moment, and I think the less we kind of do here into year end, the better. I'm not off to a some kind of a high flying start on the year or on the month, unfortunately. So I'm just kind of trying to limit the damage that is being done. Take small position size. You have to remember to use progressive exposure. I think this week I've done very little, and the very little I have done, I've just been wrong. So if it really hasn't been for like a QUBT short or a Netflix short or fortunately a Tesla long, there has not been a whole heck of a lot to do in this environment. Again, I got short AEO today. We'll see if the market, starts to unwind some of these big extended stocks, whether it be VSCO or ANF or AEO tomorrow and for the rest of the week. So hopefully you guys all had a pretty nice trading day. Just continue to be safe out there. We're kind of winding down the year. Next week we've got a market closure day, and then we have a half day. It's the holidays. If you're not performing your best right now, there's probably nothing wrong with taking a little bit of a vacation and just kind of maybe calling it a year. Even I don't think that that's such a terrible idea. And then just kind of regathering yourself for the start of the new year. If you don't feel like you're gaining a lot of traction, right, don't take big size to make your money back. Let the market reward you for how easy it is and you seeing things well, right? When the market's on easy mode, it'll give us a ton of setups and you'll see follow through from there, and it really will make things a whole lot easier when the market's in a nice, healthy uptrend. So anyway, hopefully you guys all had a great day, and I will see you guys bright and early tomorrow morning. Cheers.